Welcome everyone to the Australian GDP webinar. Okay, so this is a bit of crunch time here for the Aussie dollar. And it's sort of been a very sort of strange, precarious situation. It's trading mid-range, even though the yesterday's data was quite weak. You know, as I mentioned in some of the earlier reports, the overriding Syrian crisis is actually distorting the market somewhat, and it actually always does come back and messes around with the actual key fundamentals. That is a major nuisance. You know, and the more you see this Syrian crisis continue, the more that you will be inclined to get more aggressively cranky with the whole situation in the US and the governments and all this stuff. It's like, get the politics out of it. Let's get back to real trading, and that's what we want. Now, first and foremost, first thing off the deck is the GDP number itself. The quarter-on-quarter number is the sort of key part to it. There is 0.6%. Okay. The best thing about this is it's just a number. We can't mess this up. It's either going to be stronger, weaker, or as expected. Okay. So that makes it an easy trading opportunity. We don't have to think too hard about are we buying or selling or what's the interpretation. It's a clean trading opportunity. Now let's just come across here to the currency itself. Now what we've got is we've got some very clear levels here on the Aussie itself. 90.95 on the top side is the key level. Now, if you just go back on your charts, go back to the daily chart, maybe take it back to a year or 6 months, you'll see where this actual trend line comes from. I've just, funnily enough, lost the data feed there on the currency. J Dog, have you got your screwed up there, mate? I think I've just lost contact with the with Zenith.
Just go up to the put your time frame up and then back down.
Yeah, I just don't know. Yeah, it's just messing around with a moment. I'll try and get that readjusted. Let me just come back to the. There we go. Okay, so we've got the currency as well. Is one of the key things to look at just across the board here on these currencies is the fact that we've got the Aussie's actually rallying. This is, you know, if anything, it's a cause of concern. Aussie's going up, Euro's going down, Sterling's going sideways, and dollar yen's going up as well. So it's what's going on here? Well, clearly Aussie yen's going up. But the majors themselves should be sort of operating together. You know, we saw last week or a week or so ago, Aussie and Kiwi were coming off aggressively, and Euro and Sterling were going up. It's a complete different situation. And if you're reading all the analysts out there, they're saying, well, the Aussie and Kiwi are coming off because they're riskier currencies. Now, it doesn't make sense. It's absolute rubbish. But what we've got is the backdrop for what we want to do now, because this Syrian crisis is swinging away and sort of dominating the airwaves. These events are sort of more micro events. You know, we're not going to be sort of putting the Aussie trade on and thinking, well, if it's strong data, we're going to stay long for the next day and a half. You know, once we get back into Europe and the North American session, all they're looking at is what's going on in Syria. You know, and the news, the propaganda that kicks off there is pretty huge. So what we've got is we've got these key levels. These are the ones you want to be sort of focusing on. 90.95 on the top side, massive. There's a long way down here. If it comes out a weak number, there's nothing to stop the Aussie from going up. Okay, oh sorry, going back down. At the same time, if it comes out here at we're currently at 90.50. You know, we've got 40 points to move before we hit a sort of strong resistance level. I still think overriding, even though we're in a short-term uptrend, the overriding scenario here on the Aussie is down. I think the Aussie's still down. There's a lot of pressure to come still on the economy. This is a very short-term little squeeze higher. If it can, even if the GDP data is slightly stronger than expected, it'll be a short-term trade to get maybe long, but then looking to get short as it approaches this resistance line. All right. And that's sort of the scope of it. As it is, the stochastics down the bottom here, pretty much neutral. It's not oversold. It's mid-range. Doesn't really give us any sort of bias with regards to where the currency is going. If anything, there's a bias as it gets closer above 90, sort of 70. Let me just delete some of these lines here. As you can see, it's sort of topping out up at these levels. You know, you don't go start drawing horizontal trend lines from these highs. A lot of people do. It's actually this line here, which is the most important one. All right, and it coincides with 91, the figure just above it, a big round number. There's probably a few barriers around there, option barriers. So there will be selling up around this level, the number has to come out extremely strong. Now, we know going back, this number is released quarterly. So what you've got is a situation where the impacts from some of the mines shutting down in WA, etc., won't be impacting yet on the GDP numbers. I think the GDP numbers is a chance for it to come in much weaker than expected. Retail sales and general growth around the economies is very weak. So that's where we're sort of our bias is on the downside. Now, I can't see the GDP numbers coming out outrageously strong. So going into the trade, I think that the best option is looking for a sell on the downside and potentially a sell on the top side if the number only comes out potentially a little bit stronger. The chance for it to come out like at 1% is so minimal, or 0.7 and above, that I don't think the opportunity to sort of go long on the number is a good choice. So that's where we're sort of trying to finite for the Aussie what the potential best trade is. I think it comes from being in a short trade there. The best thing about what's happening right now at the moment is the currency is actually behaving quite well. It's in a sort of very tight sort of range. The market, there's a lot of anticipation around this number. It will set up the direction for the currency for the next day or so, or next few days, next week, until probably the unemployment figures next Thursday. So this is a big piece of the puzzle. Now, it's not, it gives you a snapshot of the whole economy, general growth. If it's weaker, then there'll be even more emphasis on the RBA to cut rates. That's why the currency will move down much more aggressively. If it's stronger, it'd have to be like 0.9%, 0.8, 0.9 to really get a throttle on the top side. At the same time, I think there's so many other parts of the economy which are weak. I think the move higher will be short term. Okay, so it's up to you whether you want to play both sides of the market. I think the downside is the best opportunity. There's a lot more room to move. And that's sort of the backdrop here. Jesse, if you want to take the screen there with the news, I'm just going to reboot the Zenith. I think I've dropped off the news page. And then we'll get up the... any questions there, guys, while we sort of prepare for this? You can just take them through the numbers in your charts there. I'll just reboot this while we're waiting.
All right, guys. So we've got obviously GDP coming up. I'll just move some stuff out of the way so we can get this sorted. All right. So we've still got 5 minutes. So let's get my pen up. All right, so as Brad was saying, the main number we're looking for is the quarter-on-quarter number, okay? Oh, I'm muted. Can you hear me now, guys? Good. Okay, so what we're looking for is the GDP quarter-on-quarter, which is that figure I've got highlighted there. Again, the Reuters poll is 0.6%. With the prior 0.6%, so they're looking for for no change there. What we want to be also looking at when we're looking at Zenith is we're coming over and we're seeing that we've had 22 economists polled for this one. The low was 2.1. Oh, sorry, I'm on the wrong one. I'll erase that. Okay, so 22 economists, 0.2 is the low, and the high is 0.7. So we are looking for variance from 0.6, but even better and more weight to be added to the trade if we do get any numbers released outside of this 0.7, 0.2. So that's what we're looking for. Like Brad was saying, with this trade, why it's so good is because, unlike the RBA cash rate yesterday, where we had, the cash rate comes out, you've got to go over, you've got to check the statement, that can be interpreted in several different ways. This number cannot be misinterpreted, so it's either strong, weak, or neutral, okay? And remember, we're calling if it comes out, we're looking for 0.6 as the pole, okay? So if that comes out 0.7 or 0.5, we're still calling that a neutral number. We want good variance from from what's expected. So
and because it's a just one second, just because it's a quarterly number, the actual you don't need a lot of variance in this. Point 2 is significant for GDP. Point 1 is like different, but point 2 and point 3 is definitely a big change. So just be aware of that as well.
All right. So I just get what have we got? 2 minutes to go here, guys. So I'll just get these numbers. Can you see that screen there, Gilbs?
Yeah, I've got you, mate. Yeah. So you get the numbers up in front of you. Obviously, the quarter-on-quarter is the sort of the main focus. We've just seen the Aussie dip 10 points. So it's starting to get a little bit choppy. The market's a little bit nervous. And this is why we're not sort of placing the orders bang down to 38, back up to 45. This is sort of jitter time, and this generally tells you how much, how important the release is. And how sort of nervous the market is. There's a bit of tension here. So you're on the 38, up to 50. The currency's all over the place. J-Dog, is that the right GMT time? 128.44?
Yeah, 20. So 10. Yeah, a couple of seconds off. So right. We've got.
Can you pop out the other your big screen? So that's got the actual GMT number on it.
Yeah, we've got 1 minute to go.
Okay, so you want to have your orders pretty much set at this point. Yeah, that's it. We've got 45 seconds. Just move it, just shrink it down if you can. Yeah, the 40 seconds. We're going to be trying to place the orders as close as possible to the actual data release. That's the sort of key to this. If you're using one of the generic platforms, then you may actually sort of struggle to get the order on. We've got 30 seconds. And the currency's widening out a touch here. That's to be expected on such a big number. 15 seconds.
Ten seconds here. Nice and stable. That's where we want it.
Okay, we're just waiting for the numbers. 2 seconds. Much higher, 75. Okay, so the currency's just gone to
expected.
50. Up, what the market, you can see exactly how the market was set there. Basically, they've gone in with a very short view. The currency's still short probably from the retail sales numbers. They've actually come in. I've just placed an order at, I think it was probably 58. It's just been set. I've just locked in some cash here at 77, primarily because the number is as expected. The year-on-year is slightly more than 2.6%, but that's not enough. As I was saying before the actual release, we're looking, I think the Aussie's in a downtrend, overall bigger medium-term downtrend. So with this number, it gives us probably a chance to sell back towards this key 90, 95 level. So I've just taken a little bit of cash off the table here on the actual release. Boom, you lock in a small amount of cash. Then you're looking to sort of get it set with your bigger position as it gets closer to 90, sort of 95 or 91 the figure. Now, as it is, it's as expected. You wouldn't get too excited about that as in like going long. What it just shows you is the market is sort of preying on weak data. Yesterday's retail sales numbers, the market is still weak. This puts a lot of pressure on this resistance line coming up. It's the only level that traders will actually put their stop losses above. It's the only level to look at. So, but at the same time, there'll be a lot of people looking to sell as it approaches this level. So that's the sort of key backdrop. The good thing is, because it's as expected, you wouldn't be expecting it to to shoot higher through this level. So there's a bit more emphasis on that. So when we're looking at this level 95, you're probably looking to get into the trade into the high 80s. Give yourself the protection through the figure. Ideally, you would have your stop loss at say 90.12, which brings back your entry level around that 88, 87, 88 level to get short. And that's where I see a bit of value in the currency at this point. Don't forget, we've got a G20 later in the week. We've got all these Bank of England meetings. The Aussie dollar is sort of plugging along pretty consistently, but it's not outshining everything, okay? And the core numbers, retail sales and unemployment figures have been weaker. So underneath everything, yeah, the things aren't all doom and gloom here, but the underlying economy is weak. That's why we're looking to sell. The numbers here, this will be the short market just squaring up, taking their medicine, and reassessing after the data. All right, so that's pretty much it. If you're looking for a more conservative view on this move, and you're looking, well, we're in the middle of nowhere, what you can actually do is wait for it to test this level up towards 91, the figure, and see how it trades through it. The overnight range was, 20, 30, 40 points. It's got room to move. The more conservative move is you watch it hit the level and come off, and that's when you can get short. For the more aggressive traders, you're looking to get short as it sort of runs into it. The one thing that may sort of stop you getting short initially is the stochastics has just turned up, obviously, because there's going to be more buying and selling on the back of the data. It's got a fair bit of momentum to go higher first. So it's like there's a fair bit of drive in the market. If it's still here in half an hour, you'll feel a lot more comfortable getting short into the move higher. The initial first move can be very aggressive, and you can get caught up in the momentum, and the momentum may be enough just to push it through that level. I'm thinking because there's no major other economic news out that it will be enough to hold it. Okay, but so that's where your judgment is. We'll be sending out an order, trade alerts via the mobile app, and you can sort of see where our pending orders are and how we're sort of getting on with it. For the day, don't forget, the other sort of key thing, if you just go back to the news there for a second, Jesse, we've got the major, we've got the major Syrian news, which is also something to consider. And you've got this page here where you've got the gusto here of the actual GDP numbers, sort of showing that the economy, even though it's not growing, it's not sort of dropping just at the moment. I'd say the layoffs in the mining industry will kick in the next quarter. Being a quarterly release, it takes probably a quarter for the data to matriculate into the economy. Then also down the bottom here, this is where things get a bit tricky. There was an earthquake in southern Japan, and they're trying to sort of brush over the fact that Fukushima is okay, and well, actually the radiation readings at Fukushima reached new high in suspect tank area, so there's potential trouble there. Now, what's the implications for that? It's probably hard to, at this point, sort of quantify. What I would be more confident with is actually just placing an order here towards this 91, the figure level. Bear in mind, you've got Syria popping up with some news, Japan with the earthquake there. It's probably a sell yen situation, buy dollars. You probably see some extra focus coming in buying Aussie yen as well. So that's Aussie yen's a good one to sort of look at and sort of assess exactly where it is. I think it's up in the middle of nowhere. It's sort of broken higher already. So we've got a few variables on the back of this which make it a little bit tricky. I'm thinking it's going to have one crack at 91, the figure, and then it's going to come off. That's my hit prediction. Any questions on that, guys?
Any questions there, guys?
No, there's not too much to sort of ponder on that. It's more just a release. You get your trades on, and then you sit back and relax. That's the whole focus of this. So,
I'll just add something to that, Brad. As you can see, guys, when we're trading this live data, you've got to be quite quick. It's not. You've got to be sort of very comfortable, executing on your platform. So, like today, it did come out as expected. Every time you sort of see that, you got no choice but to sort of close the trade out and take the cash. The difference between you actually making money like we did today on a release like that and actually dropping cash is how quick you can execute off the platform. So if you're not comfortable with executing, make sure before you're doing this stuff that you're fully capable of closing and getting in and out of orders quite quickly.
All right, guys.
Yep, go ahead.
I was just going to say that's pretty much it. I'm just going to send out an order that I'm putting on here on the top side to sell at 87 with a stop loss above that at 12 and also take profit at 90.12 on the downside. So there is a bit of risk on that. The momentum is up at the moment, so we need it to sort of test a little bit higher. It'll have the momentum with it. That's the sort of danger of the trade. But I think it's still worth a shot. I mean, I've been waiting for it to rally for a week or so. So this is the opportunity you get when you're looking at those medium to longer term trend lines. And we'll see how it goes. If you haven't got the mobile app, go to the iPhone store, T4T Forex Club. You can download the app there. Hopefully it's located in the Android store. We have heard it's gone missing. We're trying to trace it, but it may be there. And yeah, we'll go from there. Thanks, guys. Thanks for coming along, and we'll catch you at the next live trading desk.